Good evening, folks. This is Andy Pedraza with Special Effects Academy on the start of the week session for March 31st of 2019 for the Forex trading room. That said, we'll get started with our usual agenda. We're going to be looking at the results of the prior week, our currency strength meter for the month and the week, any fundamental announcements scheduled, a look at the major pairs daily charts, any setups we see in progress or significant events in the making, and a few words in conclusion. We'll start off with the long-term account, and not a whole lot to see there. We're up a few dollars, but essentially flat for the week. We really didn't do any significant long-term trading last week until the very end, when we got into a few more Canadian trades, as well as we had one long-running Canadian trade, the USD CAD short, that was carrying about 100 pips negative at one point, is now at break even. So the Canadian pairs are definitely moving into strength again, and it's catching up with the account very rapidly. On the short-term account, we did have a negative week. The week started out very positively, but Friday had a lot of volatility out of the pound pairs as the pound went in both directions. And unfortunately, we got caught up in some of that. Again, this is just normal trading. Not every week is going to be a positive. It's the overall long-term results that count. But we did have a 6% deficit on the weekly short-term account, about a little bit under 100 pips of loss. So not a huge hit, but a hit nonetheless. Notes and opportunities for improvement. Brexit is still the big unknown, and it is winding down. But every time we think it's winding down for good, they extend it another 2 weeks or a month or whatever. So there's really no telling when it's going to end at this point in time. And all we can do is, well, continue tracking and following it and trading accordingly. We're not going to be changing our approach. We're going to be setting the same brackets to enter the pound pairs on any significant move. And there are a few key sessions in Parliament scheduled for this week. One of them is on the fundamental calendar. So we'll get to that one very shortly. But in essence, we're going to have to be very careful with the pound because there is a high probability that it's still going to be moving in both directions. So we haven't figured out exactly where we're going to place our triggers for the week. That's still up for grabs. But within the next 24 hours, we will figure out what the approach is going to be for this week in particular. On improvement side, we did exit one position. We were in a pound CAD position and we exited too early. The stop, the trailing stop was set to 75 pips. In retrospect, a little bit too tight, though. Again, it could have gone in the opposite direction and generated a loss. We did take a small profit on that move, but then it continued moving. So we lost out on taking about 100 pips, give or take, as it continued moving in our direction. And we did re-enter the trade and we captured some more profit. It's still open and at profit, but we did miss a chunk of pips there that in retrospect, we're gonna need to see if there's another way of handling that so that we're not left staring at a win that we should have had and did not capture. So room for improvement there. Again, not too sure exactly how we're going to handle it going forward, but it is on our radar to see what we can do to fine-tune that. CAD strength, as I mentioned, finally reappeared in the market, and we are in multiple long-term plays on the CAD. Almost all of them at profit. The only one not at profit was the USD CAD, which was essentially at break even. It was about 10 pips negative when the weekend, give or take. So we'll see how the week starts. I did get a few alerts on the Australian very recently from their news cycle. And it looks like the Australian dollar is going to be starting the week early. I haven't looked at the charts at the trading console yet. Market opened a few minutes back, but it was expected that the Australian dollar would open strong. And we do have one Australian trade open. It's the Aussie CAD. So we'll see how that ends up playing out. Other than that, that is where we are. Oh, and last but not least, we are going to be implementing changes in the account structure for those of you following with the copy trader. So for the first, I'm going to say year of operation, which essentially ends right now, we were trading a single account. This caused some issues along the way since we could not be trading different time frames on the same currency because we were limited on the same currency pair, I should say, because we were limited as to how many trades we could have open on one pair. And of course, we could not be in opposite directions on the same currency pair. So lesson learned, this first year was an experiment, and as an experiment, it's been great. But we do have a few things we're going to need to improve on. And this is probably the key one. We're going to be breaking everything down into 3 separate accounts, short term, medium term, and long term. This will allow us to have more freedom in placing trades for one, but it will also allow you guys to pick and choose what you're going to follow. If your account is such that short-term trading is really what you should be doing, you can ignore the long-term trades, or vice versa. If you're in it for the long term, you can ignore the short-term trading, or you can have a combination of all of them. Of course, if you are in the United States and probably elsewhere as well, they're restricting that. You'll also need to have separate accounts in order to follow the different strategies. But right now, Europeans, for one, and I think Asians, they're allowed to use something called hedging, which means that they can be simultaneously long and short on the same currency pair. In the US, that's not allowed. It's completely banned. And we will be going in, we could be going in opposite directions on the same pair very easily. So it will be probably to the best of your interest if you have separate accounts. Again, if you're planning on following 2 or more of our copy traded accounts. That's a little bit confusing. I will clarify that further via email for everybody in the copy trader. And of course, if anybody has any questions after that, I will be at your disposal to answer them. Trading trades remaining open on the short-term account, none. We went in all cash on the weekend. And with that, we're going to go look at our relative strength meter for the past month and the past week. Volatility on the 30-day time frame did go down significantly. So we've had the big movers have moved off the calendar into the prior month. So all in all, the last 30 days, the month of March had a volatility of 2.29%. We can see the chart on the left that one of the key losers, I should say, were the euro and the pound. They pretty much lost ground against the rest of the world. Key winners, the Australian and yen, the Japanese yen, came out pretty well. The other currencies were a little bit of this, a little bit of that. I should say that probably the Swiss is also a winner, though the Swiss did not have as deep a move as did some of the other currency pairs. So while it did do well against everybody except the yen, the move was very slight. Really nothing major happened there. The prior week had some very steep movements. It was a week of nice volatility. You can see that the weekly volatility exceeded the volatility of the past 30 days, though not by much. Australian, Canadian, big winners. The Swiss, the euro, the yen, the Kiwi, pretty much middle of the pack. The pound lost a lot of ground. The dollar gained somewhat. I'm going to say that not significantly. There wasn't any big dollar moves, except possibly towards the middle of the week, we saw some interesting moves on the euro dollar and a few of the other dollar trades. But by the end of the week, they pretty much reversed themselves. And over the week, silver and gold did pretty much lose ground to everybody else. Moving on to our fundamental calendar for the week, we've got I'm going to say it's an interesting week. There is not a lot of announcements out, but the ones that are there are very, very important. Of course, we've got the UK parliamentary vote starting tomorrow morning. Not sure exactly what they're going to vote on this time. I'll have to catch up to the news cycle, but there is a lot of back and forth as they go into their, again, final 2 weeks. This is the second time they've gone into their final 2 weeks in less than a month. So we'll see how that plays out. I will be trading that one live. So I do plan on being up at 7 a.m. and listening to the parliamentary deliberations and whatnot, just to see if there's anything good happening. So that will be one of the fundamental sessions for the week. Tuesday, late, well, it's going to be pretty much Monday into Tuesday. So it's half an hour past midnight. Monday into Tuesday, we have the Reserve Bank of Australia's interest rate decision. This is going to be a key one because the Australian dollar has been pulled in both directions recently. And the last rate statement that came out suggested that there might be a change in the interest rate coming soon. They didn't clarify exactly when that would happen, but now we're on alert that we could have some change coming to the interest rate decision, and that would definitely be a big mover for the Australian dollar. So we'll be trading that one live as well. And of course, our monthly Super Friday, we have the U.S. non-farm payroll coming out Friday morning, and at the same time, we have the employment numbers out of Canada. So double whammy. Obviously, we need to be very careful with our Canadian trades if they're still open at that time. But we will be playing that one by ear, so we'll make a decision on that when it's closer to the fundamentals. For now, those are the four that we have planned to trade live. And of course, Friday, it will be a single session because both announcements come out at the same time, 8:30 a.m. Eastern time. And as usual, when we send out the email summaries, all the different times and whatnot will be clearly delineated. And with that, we're going to move into our charts for the week, starting with the WTI, the oil price. Continues to improve, so it's weaving up and down. Obviously, sometimes it retraces, but in general, the direction continues to be up. And finally, that seems to have caught the market's attention, and they realized that the Canadian dollar was trading too low, taking into account the improvement in oil price. And we did see a very, very sharp correction into Canadian strength happening towards the end of the week. We had at least 2 or 3 trades open at the time, and we did open another 1 or 2 trades. They got triggered as they crossed our entries for Canadian strength. So right now we have 4 Canadian trades open, all of them going into Canadian strength. As of Friday, as I said, 3 of them were at profit, 1 was at break even. Haven't looked to see what they've done with the weekly open. Not too concerned. I usually want to give it a few hours for the week to start determining a direction. The only one at this point that I would say is concerning would be the Aussie Canadian, simply because of that note that I did see coming out of the Australian news and financial services saying that they are expecting the Australian dollar to start the week out strong. So 2 strong currencies, the Aussie and the CAD, fighting against each other. That sometimes does not end well, but we'll see what happens as the week commences. Moving on to the euro dollar, a very bearish week. So we had the euro lose ground to the dollar significantly. Most of this is on the back of all the Brexit uncertainty, though the euro has other issues that are affecting it, mainly in their financial sector. It's looking a little bit in disarray. More importantly, on the daily charts, the euro is at a key level of support. So if it goes any deeper, it could be a rout, and we'll be keeping a close eye on it to open mostly short-term trades. I'm going to say that other than the Canadian trades we have open, we're going to be focusing more on short-term opportunities in the coming week. For one, as we set up the different accounts up for the copy trader, and the first one that will be open for business for short term will be the will be the short term account. So I'll be delivering the instructions for how to hook up to that account within the next 24 hours. And we will not be placing any trades until that has been sent out. The current account that we've been using in the copy trader is going to be retired. That account number is no longer going to be, well, we're not going to be placing any trades on that one going forward. So within the next 24 hours, I will be sending clear instructions on what needs to be done in order to hook up to the copy trader's newest iteration. For the pound dollar, nothing much to say on the pound from a technical perspective. It's definitely all fundamental right now as we get into that final lap of Brexit. We can see right now from a technical, you can't really disregard the technical. I'm just pointing out that the fundamentals are going to have far more weight until Brexit gets handled and it's in the rearview mirror. So for now, the technicals are going to take a little bit of a backseat, but it did hit the outermost trend line, bounced off of it. That trend line is also very much the top level of the Ichimoku cloud, so it is a significant point of support. It held, but I have no doubt that if we start getting more bad news as the week begins, we may see the pound dollar drop all the way into the mid 120s. And possibly even deeper. So it's at a very key point in well, whatever it's trying to do right now. Moving on to the USD/JPY, it's been pretty sluggish. So it started the week very bearish and then ended the week pretty much where it started out. We exited a trade, I think, at a very small profit at some point the last week or the week before, and we haven't been back into the USD/JPY since. It is following that outermost trend line still, but I think the USD/JPY is waiting to see what happens in Europe and how much of that European money is going to run for Japan as the most natural safe haven that the Europeans have. So for now, we're keeping a close eye on it, but it seems to be in a little bit of a gray zone where it could go in either direction, and well, we don't want to trade that. USD Canadian, again, all that movement happened on Friday, so we continued having a very bullish week for the USD CAD, and then on Friday, something definitely made the market realize that it wasn't sensible to be going into weakness into the CAD the way oil prices have been rising. So it made a sharp correction. In one day, it undid the entire week of trading. And of course, we'll have to see how this week opens to see if that's going to continue. We do have that trade at break even. So essentially, it ended the week where we had entered about a month back. And, well, we're waiting to see what happened as the week begins. So long as oil prices continue to improve, though, this one has a very, very nice probability of heading towards the bottom area of the chart. USD Swiss, another one we took profit on a week or so back. It's been moving sideways, a little bit of a bullish slant. It's definitely gone up since it was a bullish week, but not as significantly big one. I think maybe it went up 50 pips or so, if that. And in general, we're waiting for the next drop to get into one of these trades. I will be removing the pending orders that are on the old account so we don't get dragged into those, but those will be replaced as soon as we set everything up with the new accounts. Aussie dollar, still pretty flat. Again, have to look at what it's doing right now based on whatever this Aussie strength that's being expected. In fact, let me take a moment just to take a quick peek and see how it is opening up the week. I'm going to do that offline. And I, of course, will report anything that I see going on. So not much of a movement that I can see yet. Yeah, so we're still carrying profit on the Aussie CAD, Euro CAD, and Pound CAD. And USD CAD is still at break even. Let me take a look at the Aussie dollar for 1 second. So we did have a little bit of a gap from last week. Now let me put it on a daily chart so I can see it better. Yeah, so it did gap, but not majorly, and it is heading back down as we speak. Now let me. Yeah. So despite whatever they were saying in the news cycle, it doesn't look as if the Aussie is reacting to whatever they had been hoping. We're still seeing that move again, a gap in the Aussie CAD, but it's moving back towards where we were on Friday. So no significant change. This chart is still pretty accurate. It's a very flat chart on the daily, and again, we're not going to be getting into any Australian trades, at least until their interest rate decision, which is on our calendar. Kiwi dollar, I'm looking at a little bit of Kiwi weakness right now based on this chart. It's very sideways, but it has been showing more signs of breaking towards the bottom than of breaking out towards the top. Again, another one that's in a gray zone, very much in a limbo, but I will probably put some triggers on the Kiwi dollar in both directions and see which one takes us in. It's been sluggish for quite a while, and I think it's starting to wake up. Aussie Canadian, we're in this trade. We're at profit. We can see that nice drop on Friday. It made quite a bit of a move, taking us not only into the trade, but also starting to lock in profit. It did open the week slightly higher, not anywhere near the top of Friday's candle, but there was a little bit of a gap, and it's already closing. So it's dropping again towards the 94.75 where it ended the week. On all these Canadian trades, no change. I'm still looking at Canadian strength just based on oil price. So they are meant to be long-term trades, and they're not going to be messed with at this point. Euro Swiss, probably one of the more decent movers. We took profit twice on the Euro Swiss last week, both of them short-term trades. I did exit a profitable trade on Friday simply because I wanted to enter the weekend all cash. So we can see that at the very right, you can see the candles, the red arrow and the blue arrow. That was the very small profit we took on Friday to close out the week. Other than that, this may be a key pair if the Swiss continues showing signs of strength. Again, I'm going to wait into for the market to really open properly. This first few hours are very hectic. So I'm going to wait probably till around the London Open to see if there's any direction that's been established. For now, I'm going to be looking at this one very keenly, but I'm in no rush to jump in. Euro pound, not a whole lot to be said about this one. It's very sideways, but both the euro and the pound are stressed right now due to Brexit, and this one could go in either direction. In fact, it could go in both directions, depending how and when the market reacts to whatever's happening with Brexit. So this is not going to be my preferred pair to trade with the pound or with the euro. We'll keep an eye on it, but unless I see a significant move happening in either direction, I'm going to be giving this one a break. Euro JPY, no change, continues hugging the bottom of that sideways channel, not giving us any inkling as to when it's going to move. Very likely the yen will react at some point to Brexit, but we're not going to be jumping into this one until we see the move happening. Euro Canadian, what can I say about the Euro Canadian? One of the faster moving pairs this past week. Unlike the other CAD pairs, which went bullish for a while before correcting on Friday, this one started correcting from the very beginning of the week. So it just went down, 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 and it's the our CAD trade that's carrying the most amount of profit right now. I think in excess of 100 pips as we speak, with most of that already protected. So again, no rush in closing out those trades. If anything, we'll be looking to see if we had a limit set on that one and moving it a little bit further away, give it room to move now that the some of the profit has been protected via an adjusted stop. So more on that as it evolves. Again, this is on the old account, so that will still be adjusted on the old account, but no new trades are going to be open there, just so everybody knows. All new trades will be on the new accounts, which we will be communicating between now and, well, at least one of them in the next 24 hours, and the rest of them very early on in the week. Pound JPY, this one, at some point, I'm just going to love this one. This one is going to drop like a rock at some point if Brexit is even half as chaotic as it promises to be. This one probably has the most potential, anywhere between 500 to 1,000 pips easily, and it's probably going to happen very quickly. So this is one of those we will be setting up a pending order to take us in and probably staggering them. So as it drops, we take additional trades in the same direction. So we're going to scale in to this one, but that will be planned out again between now and tomorrow, and we'll set everything up to take advantage of it. And we will be trading the House of Commons discussions and voting as of 7 a.m. tomorrow morning Eastern time. So by then we'll have a better handle on everything, and we can start setting things up for a nice profit if we have a significant move this week. Aussie JPY, much like the Euro JPY, it just doesn't want to move away from the bottom of that channel, and I don't want to trade it until it does. So it's almost completely just ignorable at this point. Euro New Zealand, we took a very, very nice chunk of profit on the fundamental that New Zealand had earlier in the week. The retrace did start happening on Friday, but it wasn't strong enough. We entered it, we exited. I think we got out pretty flat, maybe a small amount of profit, I forget. Euro New Zealand and Euro Swiss, one of them was a winner, one of them was a loser, and they essentially canceled each other out. So I don't remember which one was the winner, but we can see that the retrace started, but simply stalled by the time the market ended on Friday. So we'll be looking at the Euro New Zealand to see if there's anything more we can get from it. But we did take in excess of 200 pips this week, and it would have been a brilliant week if not for the pound volatility and roller coastering on Friday, unfortunately. But again, that's what happens when you trade. If you're not taking these risks, you cannot make profit. So we take the risks. Pound Canadian, this is the one that I very much lamented. We were in the pound CAD in the right direction. Then it did a huge retrace of about 100 pips. And we had a stop that was 75 pips away, already adjusted to protect profit. So that one did take us out with the small level of profit. And then it dropped like a cannonball. And so we lost about 100 pips that we could have easily captured. And then we jumped back into the trade at that bottom right arrow, red arrow, I'm sorry, that you see on the rightmost candle. And we are carrying, yet again, a nice chunk of profit on that one. Again, meant to be long-term, and we are trading it as a channel cross at this time, and preferably even a channel break. So as I said at the beginning, we need to figure out a way to not be as risk-averse. And when I say we, I mean I. Of course, you guys didn't have anything to do with it. But having it trail at that 75 pips, while it was nicely conservative, and it could have gone all the way to the top, and if we had a wider stop taking this out at 200 negative or whatever, we also got out too early and missed making a bigger profit. So there's it's a tightrope that needs to be walked very carefully. So we're giving that some thought as to how we can avoid that scenario, or at least mitigate it somewhat. But jury's still out. That'll be some of the fine tuning that I'll be doing this week. For now, the important thing is we did take profit, even though it was a small one on that first trade. and we're now carrying a bigger profit on the second trade that we entered in the same direction. And we're still expecting it to go all the way to the bottom of the channel, perhaps even deeper. In fact, perhaps even all the way to the bottom to the 166 area, which is about 700 pips from where it is right now. And last but not least, our pound Swiss, another one moving into pound weakness or Swiss strength, or a combination of both. It was a very hectic week. We traded this one as well, and this was the one on Friday that gave us two consecutive 50 pip losses, one in each direction. So we're going to be a little bit more careful on our entries while this volatility lasts, especially when it's going in both directions. But you got to take that risk in order to make the profit. So again, it's a little bit of a Hobson's choice there. And while we do expect to have losses along the way, we make sure that our losses are within a manageable percentage amount. And for the new accounts that are coming out, we're going to divulge crystal clear rules on how much each trade can risk and how to set everything up. So we're never going to be taking huge losses. But what we want to do is expose ourselves to huge wins. So again, a balancing act, and we'll be communicating more about that very soon. So that's the end of our charts for this start of the week. Spring is back in the air. It's been raining here in my area mostly the entire weekend, with temperatures above the 60s for the first time in, well, since last year. So it looks like spring is finally coming back. Unrelated, but just wanted to share. So setups in progress. The Swiss pairs, I'm still waiting to see the Swiss go into a little bit of strength, and that's going to be on the back of the chaos out of Brexit and any other global events that are happening. So that's a waiting game. I think the Swiss franc is probably near its maximum point of weakness, so there's not a whole lot of risk of it going in the opposite direction, and rather a whole lot of possibility that it's going to be moving into strength pretty soon. We're not going to try to predict it. We're not going to try to preempt it. We're just going to wait for it to happen, and then we're going to ride along with it. So it's going to be a reactive move, and more on that if and when it happens. The euro, it's vulnerable right now, both to Brexit and a bunch of EU issues. So I do not expect any strength out of the euro. But again, this is not about predictions. It's about taking the trades when they are presented. So we'll take a look at how to safely trade the euro. Very likely short-term trades, except with the Canadian. With the Canadian, I'm pretty much convinced that we're into some Canadian strength at long last. But with all the other pairs, we're going to be playing it very carefully, trying to maximize our profits while keeping our risk as low as possible. Pound pairs, same thing. We have no clue where Brexit is going. And here's what's worse. We can go into a hard Brexit, which in my opinion would be a disaster for the UK. Yet in the market's opinion, the pound may get stronger. So there's nothing set in stone. There's nothing to predict. There's no way to get in right now. Even if we knew what was going to happen with Brexit, there's no way to get in right now because the market is still going to react whichever way it's going to react, and we don't know. So in all of these, and especially with the pound, we need to wait for the moves to actually happen. Once we see a move happening, we're going to jump in. The way to do that is with a pending order set at whatever we figure is the right price for confirmation of a move. Sometimes we're going to get those wrong because the market is going to trigger and then it's going to go in the opposite direction. Them's the breaks. There's no way to avoid that. But eventually, and it's already happened to us a couple of weeks back, we're going to be capturing those huge moves that are going to give us hundreds of pips in a single week. So be patient. We're going to take some small losses along the way, but the payoff is coming. Kiwi pairs, after a sharp retrace into weakness from that fundamental last week, their interest rate decision, but more importantly, the revised economic outlook that was released in a statement at around the same time, made the Kiwi weaken dramatically against everybody else. We picked up a ton of pips. It was a good fundamental trade, but now we're on the lookout for a correction because I don't think that anything has fundamentally changed on the Kiwi At least not anything that would warrant such a strong retracement. So we'll be looking to trade it back to around the area where it was, no deeper, no further away from that. And of course, if we're wrong and it does end up moving in the other direction, we'll be poised to take advantage of that as well. But my gut is telling me that the Kiwi is going to get a little bit of that back before the next move happens. And last but not least, the Canadian pairs. We've already said it, we've resaid it, and I'll re-say it again. The cat has finally woken up in the past week. The market could not continue ignoring the improving outlook on oil. I don't see that stopping unless oil starts retracing. So I think we're very nicely poised for a long-term move on the cat pairs. Might not be on all the cat pairs because each currency is moving in different directions. And if the pound, just to pick an example out of thin air, gets stronger, then, well, the pound cat won't be moving as deep or as quickly as the other cat pairs. Indeed, may go into a reversal. But that's why we don't trade a single pair, I guess is what I'm trying to say. So we spread the risk out. We're bullish on the cat itself, which means we're trading everything into cat strength. We have 4 open trades. If 3 of them are winners and 1 of them is a loser, I'm perfectly happy with that. So we'll see how that ends up. And last but not least, and I said it already, changes are coming. We will be separating the trading room accounts and copy trader, the same accounts, into 3 separate accounts with different time frames, approaches, targets, risk levels, parameters, whatnot. That will be shared with everyone soon via email. As I said, it's been a wonderful experiment. We've learned a lot in the last year on how to properly structure this. We weren't new to trading. We were new to setting up a copy trader. And I do apologize for any mistakes we committed along the way, but they are being fixed, and we're pretty sure our next year is going to be even better than the first one. So we're reassessing with all the lessons learned. And as always, just to reiterate, successful trading does require adapting and evolving, and that's what we will always be doing. And we do want to thank everyone who made it possible. I will be sending out a little bit of not a promotion. I don't want to sell you guys, quite the opposite, but I will be sending something out as a thank you to everybody, and it will not involve any payment at all. Simply a thank you from us to everybody else, and I won't say what it is here because this will be shared publicly. I will be sharing that privately with each one of you. And that is going to be it for me tonight. Does anybody have any comments or questions? Okay, then thank you very much. That is a wrap. As always, I will send a summary out very shortly, along with all the instructions for the week. Thank you very, very much.